Can a recession be both good and bad for your money? Well, we're going to answer that question in our financial freedom video today, so definitely stay locked in. Hi, my name is Carson Graves, certified financial planner and president and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. And we want to thank you for tuning in to our Retirement Education Concepts videos. These videos were created to help to make the difficult and confusing retirement process simple.
Yes, because with so many retirement strategies out there and so many retirement concepts, and of course with so many retirement products, it can become very difficult for consumers to digest it all. That's why we are so fortunate that we work with a team of expert advisors to help us build a financial roadmap that's going to let our clients know when, where, and how they can reach their retirement goals.
For additional concepts on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos. So Carson, you feel that a recession is neither good nor bad. Now this seems like another one of your provocative statements, so please explain.
Well, I'm just going to simply call it a provocative opinion, okay? If that's okay with you.
Sure.
It's a provocative opinion. But like I've stated before, Andrew, many times, most things in life are neither good or bad. It usually depends on the perspective of the individual circumstances. Believe it or not, someone's hero is another person's villain, and vice versa. And the same can be true when it comes to a recession. So what we're going to do today is talk about this very unique dichotomy that looms over our economy always. But before we get into that, there are 2 rules to retirement income that we like to give you. And Andrea, what are those 2 rules?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
Okay, so let's go ahead and jump into our lesson today and talk about why a recession should never be considered either good nor bad.
So Carson, how do we know when we're in a recession?
Well, I can tell you that a very simplistic and common definition of a recession is 2 consecutive quarters of negative GDP. That's the gross domestic product. But I'm also here to let you know that that does not always have to be the case in order to be an indication of us being in a recession. You can also have, lower production. You can start having higher unemployment. You can also have lower consumption by consumers. And you can also perhaps have a low consumer sentiment. And so when you have all of those type of scenarios taking place, Andrea, you really don't have to have the simplistic definition of 2 consecutive quarters of negative GDP in order to be in an actual recession.
So Carson, it seems that recessions always come and go. So why can't these situations be avoided knowing what we know from the past recessions?
Seems like a very common sense question, and it should be a very common sense question, but there's always this element of the unknown, Andrea. That is why. So let's go ahead and take a walk down memory lane and just talk about some of the past recessions that we may have great recollection of. We all may remember the tech bubble in 2000, the over-evaluation of technology stocks. And then that was followed by 9/11. And then, of course, we had the major housing debacle in 2008, or the financial crisis. And more recently, Andrea, we all know about the pandemic. Now, even though those times, if you're retired or you had money in the stock market, although those times could have been very, very painful, we still cannot simply label those times as good or bad, because it's all about what did we learn from that particular situation. So let's go ahead and address some of the recent recessions that I mentioned. Let's talk about the tech bubble in 2000. What did we learn from that? We learned that we can no longer just simply evaluate a company and put a price tag to a company that absolutely have no earnings. And some of these companies didn't even have a place of business. Yet some of these companies were still evaluated at 30 and 40 and even 50 times earnings, but they had no earnings. We also learned in that time that maybe you should not have the preponderance of your retirement dollars in any company stock, no matter how good that company may be. Go ahead and see Enron for that matter. Let's also address the housing crisis. It was a very, very painful moment. Many people lost their homes. But what did we learn from that particular situation? that maybe everyone did not deserve to actually own a home. Everyone couldn't afford a home. So subprime lending is now a thing of the past. So now we no longer have to worry about what that particular predatory lending environment did to the economy. And lastly, let's talk about the pandemic. Well, the pandemic could have taught us a lot of things. One, we all now should know that we need to have some money set aside for major emergencies like that. And two, hopefully the government also learned a lesson that it may not be such a good idea to completely shut down the entire economy. That hurt a lot of people, maybe more so than the pandemic itself.
Now, Carson, I've experienced these recessions in the past, and they've never felt good to me, especially the most recent being the pandemic. So how can you say they're good?
I can totally understand that perspective, and you have a very valid point. But here's what I want to do. I want to talk about what happens in a recession, the bad things, and then I want to juxtapose that to what actually can be good from that as well. So in a recession, what typically happens? You're normally going to have high unemployment, right? Now, high unemployment is absolutely not a good thing when it comes to a business, because if you're looking at a business, when you have high unemployment, what is going to happen? People cannot buy your goods and services. So in that situation, what's going to happen is that most of these companies, because they're not getting their goods and services moved, they're going to end up having to lower their prices during a recession. And who is this going to benefit? It's going to benefit a lot of my clients, people who are on a fixed income. They're going to definitely enjoy the fact that prices of things like bread and eggs and other things are going to be going down, and so they can keep more of their money in their pockets. And let's go ahead and look at another side of what happens in a recession, or what I would call a pre-recession. We're seeing that right now. What happens is that you're going to start to see inflation increase before a recession. When inflation is increasing, the Federal Reserves are going to start raising interest rates to a very high level in order to cool down the economy, to perhaps send us into a recession. But in this particular time, right before that recession, who's going to benefit from those increasing interest rates? Again, it's going to be people who like to save money, people who keep money in a savings account, people who may keep money in annuities, because those rates are going to be rising as well. You can literally go out and find savings accounts that are paying in the neighborhood of 5%. That was really unheard of just a few years ago. Now, on the flip side of that, once the economy starts to tilt into an actual recession, those interest rates are going to start to come down. Now, in that particular scenario, Andrea, all those savers are going to probably be disappointed because their CD is no longer paying 4 or 5%. Who is that going to benefit? Well, it's going to benefit people who want to buy a home, people who were priced out of a home because interest rates were just too high. So instead of paying 7% on that home mortgage, maybe now you can pay 3 or 2% or less on that same mortgage, which can end up saving a home buyer thousands of dollars. And one last group that I want to point out that will absolutely benefit during a recession are people who like to invest their money. During a recession, you're typically going to see the stock market declining. Now, in this particular time period, many investors find it very, very advantageous because they can end up finding good companies at a bargain. Warren Buffett, Andrea, once famously noted that you should be fearful when other people are greedy, and you should be greedy when other people are fearful. And I can tell you, during a recession, a lot of people have a lot of fear, and therefore it can be a great buying opportunity for those who like to invest.
So Carson, since recessions are unavoidable, who's most likely to do well in a recessionary period?
Yeah, if you are in these particular industries that I'm going to be naming, Andrea, you're probably going to do very well in a recession. The first group that's going to do well, unfortunately, are bankruptcy lawyers. In a recession, what's going to be happening? People are going to be probably losing things. They're going to be probably filing for bankruptcy in that particular time period. So bankruptcy lawyers can do well during a recession. Another group who's going to do probably well in a recession is the food and beverage industry as well. Because no matter what's going on, people are definitely going to have to eat, and probably to relieve themselves of the stress of a recession, they're probably going to be drinking as well. So the bars are going to still be hopping during a recession. So if you're in the food and beverage industry, you're going to typically do well. Another group of people who are going to do well during a recession are people like myself, financial advisors. The financial service industry typically does well during a recession because why? People are being laid off and they don't know what to do with that old 401k anymore. Or they have been pushed into an early retirement and now have to figure out how do they make their money last throughout their retirement years. Another group that typically does well in a recession is the healthcare industry, Andrea. Because no matter what's going on, a recession or not, if you get sick, you're going to need to have care. And so if you're in the healthcare industry, you're probably going to have a job in a recession. And the last group that I want to notate that's typically doing well in a recession are government employees, people who work for the government. And unfortunately, it may be the same people who pushed us into a recession that usually will keep their jobs. So if you are a government employee, you're probably going to be doing okay during a recession.
All right, Carson, so what's the moral of this video?
Well, the moral of this particular video, Andrew, is that we know that recessions are going to be with us always, much like inflation. So it's probably a good idea to go ahead and start preparing for that adequately. And that simply means just having the proper amount of emergency savings for that rainy day. And that also could mean having a backup plan to make sure that you're going to have adequate cash flow.
Well, Carson, this was very helpful. So thank you for your insight on this topic, and thank you for watching. And if you felt this information was beneficial, please like this video and share with others.
Please understand that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today.
After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.